folks, a new week. This is a new me, a old me. Going on all stripped down to the basics, okay? So what we have today is I'm going to a subject where the eagles don't dare, which is the economic situation in this country. You can see that on all our media, which is Namastak and a Godi media, which includes all the big channels, Times Now, CNN, IBN, everybody is either trying to do Ukraine, overtime on Ukraine, or then basically this Gyanvapi mosque. And the reason is, I'm not sure why Reliance is in this, right? Because at the end of the day, they own kind of CNN, IBM. I'm not sure why he's in it, right? Because I believe he's on the other extreme and going on this Gyanvapi. But he doesn't need it, right? The reality is that, folks, the economic situation is in a deep dive. I have nothing against selling the family silver, which is the PSUs. I, in fact, think we needed to do that absolutely. But my caveats are a couple. One is the methodology, that the way you do it. It just seems the way by this Pawan Hans, where somebody was absolutely first to crash and burn Pawan Hans, which is a 2,000 crore profit company, into nothing by forcing them to set up these helipads all over the country, which are never used. You reduce its valuation by suddenly showing heavy losses, and it goes to people you don't even know. Nothing's out there, and all you're saying is, oh, it just doesn't pass the smell test because everything else stinks of Adani and whatever. Because here we are, Adani inks wholesale deal through offshore SP. What do you expect? $10 billion, guys. We gotta nail him. He's the biggest debtor to our public sector banks, and I'm not even sure whether he's ever going to pay it back. And the question is, who's backing him? He stinks of crony capitalism at his worst. Now that you have this, okay, then you have the party really is over. And this is, she says at the best, Radhika Pandit, to stall price spiral, RBI is likely to respond with aggressive hikes. The expectation of a sharp spike in inflation led to it to announce an off-cycle 40 basis points hike in the policy repo rate. The RBI is now likely to respond with aggressive rate hikes to prevent the price spiral from getting entrenched. By committing to bringing down inflation through rate hikes, the central bank can anchor inflationary expectations. Unanchored expectations will further fuel inflationary pressure. The problem why it's happening like this is because we are the center or the PM is surrounded by incompetent only yes men and women, which include Sitaraman, who basically I'm not even sure why she's there because she's not done anything for. I mean, she really is clueless. So the few people, like I said, we name a few. Sitaraman, none of her budgets have had any modicum of reality in them, only pipe dreams. Well, what do you expect? She didn't complete a PhD. I don't know whether she's an economic major. Then you have Das, who's the RBI governor, only a good guy made from Chennai, IAS officer with MA in history. Boys and girls. Manmohan Singh was way up there, right? Shankar Das is way down there. Why does he do it? Why does the PM Modi do it? Because he just likes the yes men and people who keep saying that he's the greatest thing since sliced bread. Right? Or since the Vedic period. He's taken us back there, just like his decision on demonetization, probably the worst decision ever, right? And everybody's forgotten about it. He forced everybody to forget about it, all this chaos and lynching and Gyanvapi mosque and all the Chapusi media, especially the Namastak ones on Reliance. And I don't even know why Adani needs to do that, right? Hey, but anyway, let's just say what this is. 5 years since note ban. What has changed? The surgical strike on illegal cash that wasn't. By the time the Reserve Bank of India came up with the final figure about the amount of demonetization currency returned to banks, the figure was more than 99%. Where is the windfall, Prime Minister Saab? You're supposed to actually, I guess, stand at some choraya and get beaten up. Has demonetization pushed India towards a cashless trajectory? Here's it. Currency in circulation was 12.1% of India's nominal GDP in 2015-16. The year before demonetization, it plummeted to 8.7%. The number reached an all-time high of 14.5% in 2021, so not achieved. Did demonetization lead to a tax windfall for state? An even bigger question about the long-term gains of demonetization for the economy comes from the fact that the GDP growth rate started declining sharply in the post-demonetization years. Indian GDP growth rate increased consistently from 5.2% in 11-12 to 8.3 in 16-17. This trend reserved itself when the economy started losing growth momentum, with the GDP growth reaching just 4% in 19-20, and less said about it is better. Demonetization's impact on digital and formalization of the economy. In some cases, formalization of the economy can perpetuate even worsen working conditions, but formalization can be a double-edged sword. If it happens at the cost of putting small informal firms out of business, then the disruption in the informal sector can weigh on demand in subsequent periods. It is also possible that the formalization wears off over time. The formalization that comes only on the back of external pressure or leads to deep distress in the informal sector may not be sustainable, as is shown. In contrast, the formalization that happens on the back of policy changes, which help small and informal firms grow over time into medium or large formal sector firms, is more sustainable. So I don't know, are we back in the Vedic period of greatness of our country, or was it just about UP elections, right, folks? Or just plain sheer lack of knowledge? Cheers. The way stock markets have behaved globally, it shows a complete lack of breakdown of what the purpose of stocks was to create avenue for raising capital for manufacturing, for production. Now it's just about valuation and putting money in the pocket of promoters, right? Complete breakdown between the Wall Street and the Main Street. Reach stratosphere, clearly the only one responsible for this huge disparity of wealth that is developed all across major democracies and even places like China, right? But some point of time, the faster they go up, the faster they come down as fast, and the pain is intense, right? So here's the reasons, right? Retail inflation hits 8-year high of 7.8% in April, nothing good happening in India. Rupee slumps to an all-time high, low recovers to 77.42. Near historic low forex reserves below 600 billion. EMIs to rise as RBI hikes key rates by 40 BPS after 4 years. RBI raised policy rate at surprise MPC meet, had really no choice. And what they did was perfect storm pulls Sensex down 1158 points to below 53,000. Markets crash 2% as US inflation fuels fears of Fed hike, which happened. But this is what I was saying. This is what Maithali Busnurmat says, a fly in the ointment. The Indian retailers rush into equities as a not so obvious macroeconomic downside. The net result is less money flowing into banks than earlier, adversely impacting banks' ability to lend. In a bank-driven system like ours, lower credit creation has a huge opportunity cost in terms of lower investment and hence lower growth. More so when investment in equities is overwhelmingly in the secondary market or in the initial public offerings of the offer for sale variety that brings in little fresh money into company for investment. That's exactly what I said. She said it so beautifully. Today, when banks are reluctant to lend and corporates are reluctant to borrow, this might not be a serious issue, but once recovery gathers pace, we do want banks to lend. Will they be able to meet the system's demand for credit if the trend of households deserting banks for equity markets continues to gather pace? Things to hear, and this is what Swaminathan Iyer writes. Scary. The emperor's new clothes. In a market so full of madness, a big global stock market crash is coming. He says global stock markets will suffer a major crash within the next year. There, I've said it, without hedging or qualification. He says markets have soared beyond all reasonable reason because central banks everywhere have pumped trillions into economies since the 2008 crash and more during the COVID crisis. But the flood of money has indeed caused inflation elsewhere, not in consumer markets, but asset markets, creating stock and property bubbles and encouraging con games. The chickens are now coming home to roost. Inflation is rising fast everywhere. It is definitely not just a temporary consequence of supply disruption of COVID. The US Fed has admitted its needs to get tougher and will raise interest rates 3 to 4 times this year. It will reverse quantitative easing. It will stop buying billions of securities. Instead, it will sell its existing hoard, sucking money out of the markets. Other central banks, including the RBI of India, will follow suit. Nevertheless, an eventual crash is inevitable in a market so full of madness. The end is nigh. And what does Ruchir Sharma have to write, which is critical? Stocks crash and people's anger. Having fueled the market bull run, policy makers may face a backlash when indices turn. Retail investors who sat on the sidelines for so many years rushed in after the pandemic-induced flash crash last year and have since been buying at every dip with mounting enthusiasm. They represent not only a new cohort of investors but a new voting bloc, increasing the risk of populist backlash should one of these dips turn into another bear market. Remember, the policymakers played a big role in starting this craze. Flush with government support, checks and fresh liquidity from central banks, new investments began pouring part of their income into markets, helping to turbocharge the bull run into a 13th year. All told, US investors alone poured more than $1 trillion into equities worldwide in 21, 3 times the previous record and more than the prior 20 years. Retail investors are just as amped up in India, one of the hottest stock markets in the world this year. Going back to crash of 29 in the US, one common feature of bull markets is that retail investors catch on too late. Today they continue to buy even as corporate insiders are selling. Another warning sign of impending trouble for the market is heavy borrowing to buy stocks or on margin debt. Margin debt in the US now amounts to 2% of GDP, a high since records began 3 decades ago. A large chunk of it is on the tab of retail investors. The result is a market that is a historically overvalued, overowned to a perhaps unprecedented extent, politically flammable. We've seen how Sri Lanka has taken a deep dive. A lot of people are sitting ensconced in the knowledge that India is in a better shape. But hey, it's got a lot of indicators, especially the deficit is out of control. If you add the state in it, the debt is not rising. This family silver that's been sold should have been actually used to reduce the debt, but it's now being used for God knows what. And this is what Swaminathan Iyer writes, and what I've read out about Ruchir Sharma. Remember 2 things. These guys, both of them, have been right more often that they're not. In fact, most of the time, right? So she writes, stand in line on death row. India won't escape the coming global debt crisis. That'll leave it down, not out. It says, many Indians smirk at the ousting of Imran Khan as Prime Minister in Pakistan and the coming dismissal of Gotabaya Rajapaksa as President in Sri Lanka. Both have been hit by debt crisis. The smile will soon be wiped off all smirking faces because the debt typhoon lashing our neighbors is engulfing the world, and India will not escape unscathed. The bad news that even today's prices are unsustainably low and will soar much higher. Right now, fuel prices are linked to a crude price of 105, expects to go to 130. I predicted in these columns in January that the stock market would crash in 22. When markets fell in the last 6 weeks, some friends congratulated me on my omniscience. No, I told them. What has happened till now is not a crash, merely a modest correction. The crash will come later in the year and take markets far lower. I am a bear. The coming crash may not be as terrible as the Asian financial crisis, but it could be as bad or worse than the taper tantrum of 2013. Bad news, but India will be dented if not down. India's weakest point is its fiscal deficit. That's what I said. Nevertheless, the combined fiscal deficit of the center and state was budgeted at 11% of GDP. By international standard, this is horribly high. He says a widening fiscal deficit can at some point trigger a market collapse. Then what he said? Inflation is also contagious, says Abhishek Barua. Why an RBI-led rise in borrowing costs is both imminent and imperative. Even if inflation is primarily driven by supply bottlenecks, there are few warning signs that a central bank must heed. High and persistent inflation has an annoying habit of spreading to other items, and that it is. And what does Ashok Desai write? He says, no, it's not very achetin. It's time for blind optimism to give way to fact-based analysis and damage control. Wake up, you Godi media. 4-point plan for RBI. Inflation is high today because underlying pressures have been building up for years, and RBI, despite its legal mandate, has not acted in time. Since the start of the pandemic in 2020, CPI inflation has averaged 5.8%, close to 6% upper threshold of RBI's target band, despite an unprecedented collapse in demand. Didn't act at all. He says, this guy says, good side of inflation. For starters, inflation is moderate. Does a great aid to the government expanding fiscal intervention and economic sluggishness. And the second one was trade terms for the farmer. Crashed and burned because of policy change. But there this pain of the consumer. High inflation will reduce discretionary spending and may have bigger second round impact. A quick calculation using shares of different items in the household's consumption basket shows that a 5% increase in spending on fuel and transport costs alone could reduce overall consumption levels in the economy with almost 0.5% of GDP. Guys, hear ye, hear all. This is the important point, folks. Let's get to reality. Stock markets are not necessarily the indicators of the health of the economy, just the health of a select few. 3 cheers. So the disparity and concentration of wealth has also been acknowledged by the World Bank and the IMF. He says the Bank and Fund show, letter from Washington, Seema Sarovi, the call for private capital to play a role was more than intriguing. It should be seen in the context of the global saving glut of the ultra-rich. The IMF's April 2022 World Economic Outlook lights how the savings glut has coincided with rising inequality in the US and other countries. The richest 1% across the world, including India, have done fantastically well, taking 38% of wealth gains since the mid-90s, while private share of national wealth increased, public wealth decreased. Important. That's why you got to go back to this. And this is when you say, this government is brain dead, right? Government bans wheat exports after new low output estimate says need to ensure food availability. Why ban is knee-jerk reaction? Hits farmers and dents policy credibility. Latest inflation data sparked action to tame wheat prices. Sure did, but we got enough wheat, right? And we should have known way before. At G7, threats India says wheat export curbs to aid neighbors. This is the Prime Minister who was in Finland all over the Europeans saying we are feeding the world. All right. G7 criticizes New Delhi's decision to bar wheat exports, which they did. Within hours of curbs, domestic traders claim prices are softening. Why would they do that? Because traders are out on the limb. Maybe this is an Adani moment. This is all being done orchestrated for Adani. Wheat ban call as states revise procurement targets. But this is the important part, that wheat is also having a huge impact globally, right? A looming crisis for Chinese wheat. This is New York Times. And see what is written here in Wall Street Journal. Poor weather delays Midwest crop planting. It says a tight crop supply globally has boosted grain prices. Year to date, corn futures are up 31%, while soybeans have risen 19%, and wheat has increased nearly 12%, folks. And what has this done? It's killed the states. Center cuts wheat allocation to 10 states under NFCA. Bihar by 50%, Jharkhand by 50%, Odisha by 100%, Madhya Pradesh by 46%, Tamil Nadu by 60%, Gujarat by 30%. Hey, what the poor gonna do? What the poor gonna do? I don't know, Mr. Modi. I don't know. Caught with chaff. Government's ban on wheat export hurts farmers and traders, dents India's image as a reliable global supplier. Last June, the NM government imposed stockholding limits on pulses going against the farm reform laws. It has enacted only in September 20 and before their formal repeal in 21. The move and the latest decision banning wheat exports constitutes not just knee-jerk reaction to inflationary pressure. Of more concern is the long-term impact on the farm trade and policy credibility. So this is the point that you've got to learn. That's why the farmers don't trust this government. The ban on export has apparently been prompted by wheat procurement plunging to around 18 MT from last year's all-time high of 43.3 MT and the resultant depletion in public stocks, even seen as threatening food security. But if that was so, what stopped the government to pay a bonus above the minimum support price, the incentivizing farmer to sell it to it rather than the private trader and exporter? Answer that. The government answered that. Sitaraman answered that. The Prime Minister and the Home Minister. Everybody in his kitty. Jai Hind.